Hello, I would like to tell you about the first Canadian bank, the Bank of Montreal, established by a group of 9 merchants in 1817, when neither Upper nor Lower Canada had a currency of its own. As Canada grew, so did the bank, funding many major infrastructure projects. Even prior to Confederation, the bank was the largest financial institution in the country and the 3rd largest in North America. Expansion continued, and before the end of the 19th century, the Bank of Montreal had a presence from coast to coast. Through mergers and acquisitions in the early 1900s, the bank grew very quickly. From the outset, the Canadian banking system was different from any other in the world. Its nationwide branch network helped ensure the survival of local branches. As other banks failed during the Great Depression, the Bank of Montreal grew in size and importance, earning the respect and admiration of the Canadian people. Post-war economic prosperity occurred in many sectors, and the Bank of Montreal was a leader in financing the boom in business. In the mid-1950s, the bank was the first chartered bank in Canada to grant mortgages, making home ownership possible for the working class. Always looking for new opportunities and new markets for expansion, Harris Bank of Chicago was acquired in 1984, creating a significant presence in the American Midwest. The Bank of Montreal's growth strategy meshed well with that of Harris, which today has a presence in 12 states and is 15 times larger than it was when acquired in 1984. Being the first North American bank to provide full-service banking in both countries, the bank's expansion strategy continued to gain momentum. More recently, it has been gaining a foothold in China and other rapidly developing countries. Another area of expansion for the bank was its acquisition of what is now known as Nesbitt Burns, a leading full-service investment firm in North America. Today, the Bank of Montreal is known as BMO Financial Group and is comprised of 3 operating groups: Personal and Commercial Banking, Private Client Group, and BMO Capital Markets. Chairman of the Board and CEO William Down is responsible for ensuring the board operates independently of management. Each board member is responsible for holding senior management accountable to shareholders, customers, and employees. Directors sit on audit, governance and nominating, human resources, and risk review committees. Members of the management team are highly qualified with stellar academic credentials and business experience. The Canadian banking industry is regarded as one of the best in the world, where strict government controls are in place and laws have been passed to regulate and control the industry. With only 5 major banks, the Canadian banking industry is easier to oversee than the American banking industry, where there are several hundred statewide and regional banks throughout the country. As Michael Porter says, the real point of competition is not to beat your rivals, it's to earn profits, and the big 5 Canadian banks coexist and all earn large profits. The threat of new entrants is controlled by the federal government, and rivalry among the competitors is to earn the largest profit. All of the major banks have expanded into various international markets to boost their profits, which is aligned with their strategic plans and commitment to shareholders. Although it was the first Canadian bank, the Bank of Montreal today is not the country's largest. In terms of market capitalization, RBC is the largest, being approximately twice the size of BMO. The Bank of Montreal is in 4th place with a market capitalization of $34.8 billion at the end of last year. Over the years, the ranking of the Big 5 has changed numerous times. Some have not been as successful in the U.S. market as the Bank of Montreal, but may have had great success in other international markets. The most recent major acquisition for BMO was the Marshall and Isley Corporation, a network of banks in the American Midwest, a deal worth approximately $4.1 billion. So let's take a look at how the Bank of Montreal has expanded in the past 5 years. It has added 429 branches, 1,038 banking machines, and over 12,000 employees. It has increased assets under its management by $165 billion, revenue by $3.7 billion, and net income by $0.6 billion. Over the same period, its EPS and dividends have also risen. In 2011, it was the 7th most profitable company in Canada and the 4th most profitable bank, earning $2.8 billion. A whopping 57% increase from 2 years previously. The bank increased its corporate donations to over $66 million in 2011 and has consistently donated millions to charity, primarily hospitals and healthcare, civic and community initiatives, and education. It is also the proud sponsor of over 15,000 youth House League soccer players across Canada and a Major League soccer team and soccer pitch in Toronto, as well as the Calgary Stampede and Skate Canada. Using a SWOT analysis and TOES matrix to analyze the company, one quickly realizes the sheer size of this iconic Canadian company. The lengthy list of strengths is clearly aligned with management strategy, which has stayed the course for almost 200 years. The highly respected BMO brand is a growing entity, rapidly expanding in the US, China, and elsewhere. Being a major player in such a highly regulated industry can be restrictive and impact growth, while at the same time affording it protection and security which many failed American banks lacked. It is expected that the bank will continue to search for opportunities in foreign markets, building on past successes. It would seem that the bank's management team attempts to take measures against potential threats to the stability of the organization, such as its hedging plan to protect against US-Canadian dollar fluctuations. Perhaps the biggest threats could come from attacks to the computer or telecommunications system and natural or health disasters which could disrupt the business for a prolonged period of time. Using a TOES matrix, it would appear that the bank is adept at using its strengths to take advantage of opportunities and overcomes its weaknesses by taking advantage of opportunities. Much of this comes down to having the resources to be able to do what needs to be done to preserve and grow its assets. The vision of the bank is to be the bank that defines great customer experience, and it would appear that strategies and key priorities of the bank are aligned and interwoven to achieve this vision. In a nutshell, the bank's strategy is to continue to accelerate earnings growth by focusing on the customer and client relationships and by expanding its customer base into select global markets. The most recent key joint ventures and strategic alliances forged by the Bank of Montreal include Air Miles, Sobeys, and Moneris. All of these partners share similar strategies and have been extremely successful at not only enhancing BMO's bottom line, but continuing to increase brand loyalty and BMO's highly respected reputation. The bank has had a presence in China for 20 years, gaining branch licenses and making inroads into funds management, foreign exchange trading, and pension plans. Given the time it takes to cultivate business relationships in China, it would appear that the Bank of Montreal has had a head start over many of its domestic and international competitors in this enormous market. The bank's quarterly and annual reports provide details of the bank's performance on both annual and 5-year basis, as well as comparing its own performance to that of its peer group. The bank exceeds what is normally disclosed by publicly traded companies, partially due to the strictly controlled and regulated Canadian banking industry. It would be my recommendation for BMO to continue to do what it has done for almost 200 years. It has never rested on its laurels, and its present plan to increase earnings and expand into new markets should help preserve this iconic Canadian institution's reputation and ensure its success for many years to come. Thank you.